Jennifer was a financial planner. That's important. She wasn't financially illiterate. She wasn't careless. She helped other people manage their money for a living. She had a 6-month emergency fund, a maxed out 401k, a paid-off car. She had health insurance through her employer. A good plan, she thought. $150 monthly premium, a $2,000 deductible, and an out-of-pocket maximum of $8,000. She had done the math. Worst case scenario, she'd pay 8,000 inches a year. She could handle 8,000. Then she found a lump. Breast cancer stage 2, caught relatively early, which was good. Treatable, which was good. She had insurance, which was supposed to make it manageable. 18 months later, Jennifer had paid out $37,000. Not her insurance company, her. 8,000 the first year, 8,000 the second year. When treatment crossed the calendar boundary, a detail nobody mentioned when she was reviewing her plan. 14,000 inches denied. Claims her insurance company said weren't medically necessary, even though her oncologist ordered them. 7,000 inches out of network charges for the anesthesiologist during her surgery. A doctor she never chose, never met before. She was unconscious and couldn't have refused if she'd wanted to. Jennifer liquidated her emergency fund by month 4. She stopped contributing to her 401k by month 6. She put $11,000 on credit cards by month 12. She took a hardship withdrawal from her retirement account by month 14, eating a 10% penalty plus taxes on money she'd spent 20 years accumulating. Jennifer survived the cancer. She didn't survive it financially. At 53, she's starting over. 20 years of discipline, saving gone. She did everything right and it didn't matter. She had insurance. Insurance was supposed to prevent this. My name is Bobby, and I spend way too much time thinking about why having health insurance in America doesn't actually protect you from financial ruin. If you have insurance and believe you're covered, if you think your out-of-pocket maximum is your worst-case scenario, if you assume that doing everything right will keep you safe, make sure to hit that subscribe button. What I'm about to show you might be the most important financial reality check you'll ever get. I call it the Medical Roulette Trap. And every single person watching this video is playing, whether they know it or not. Here's the lie we've all been told. If you have health insurance, you're protected. If something bad happens, you'll pay your deductible, maybe hit your out-of-pocket max, and the insurance company covers the rest. That's the deal. That's what the $800 monthly premium is for. That's why you chose the plan with the $7,000 out-of-pocket maximum instead of the cheaper plan with the $12,000 maximum. You did the math. You made the responsible choice. The math is a lie. According to a 2019 study published in the American Journal of Public Health, 66.5% of all bankruptcies in the United States are tied to medical issues. Sampanjar. And here's the part that should make your stomach drop. 72% of those people had health insurance when they got sick. They weren't uninsured. They weren't irresponsible. They had coverage. They paid their premiums. And they still went bankrupt. Let me show you how the Medical Roulette Trap actually works. Because your insurance company is betting against you, and they've designed the game so they rarely lose. The first mechanism is the out-of-pocket maximum reset. Your plan has an annual out-of-pocket max. Let's say 0. You think that's your ceiling, but that ceiling resets every January 1st. Get diagnosed with cancer in October, start treatment in November, and by February, you've paid $16,000, $8,000 in year 1, 8,000 inches year 2, for what feels like one continuous illness. Get a chronic condition that requires ongoing treatment, and you're paying that maximum every single year, potentially for the rest of your life. $8,000 a year for 10 years is $80,000. For 20 years, it's $160,000. That's not a ceiling. That's a toll road with no exit. The second mechanism is claim denial. Insurance companies deny claims, not sometimes, constantly. According to a 2021 report from the Kaiser Family Foundation, the average denial rate for in-net network claims on ACA marketplace plans was 17%, nearly 1 in 5 claims denied. For some insurers, the denial rate exceeded 30%, and here's what makes this particularly vicious. The same report found that fewer than 1% of denied claims are ever appealed by patients. People get the denial letter, feel overwhelmed, and just pay the bill themselves. The insurance company is counting on your exhaustion. They're counting on the fact that you're sick, you're scared, you're drowning in paperwork, and you don't have the energy to fight. So, you pay thousands of dollars you didn't owe, paid because fighting felt impossible. The third mechanism is out-of-network charges, and this one is genuinely sinister. You choose a hospital in your network. You verify your surgeon is in network. You do everything right. But the anesthesiologist who puts you under, out of network. The radiologist who reads your scan? Out-of-network. The lab that processes your blood work? Out-of-network. You never chose these providers. You never saw their faces. You couldn't have refused them if you'd tried. And they bill you separately at rates your insurance doesn't cover for amounts that don't count towards your out-of-pocket maximum. The No Surprises Act, passed in 2022, was supposed to fix this. It helps in some scenarios, but the enforcement is inconsistent, and the system for resolving disputes is backed up for years. Meanwhile, the bills keep coming. Let me give you the math on what this actually looks like for a typical family, because this is where most people's financial plans fall apart. The average American family's health insurance premium through an employer is now over $23,000 per year. According to the Kaiser Family Foundation's 2023 Employer Health Benefits Survey, the employer pays about $17,000 and the employee pays about $6,000, roughly $500 a month in premiums alone. On top of that premium, the average family deductible is over $3,000. The average out-of-pocket maximum is around $8,000 for an individual, higher for a family plan. So before your insurance actually covers anything at 100%, you're potentially paying 6,000 inches premiums plus $3,000 in deductibles plus co-pays and co-insurance up to your out-of-pocket maximum. For a family, the out-of-pocket maximum can reach $16,000 or more. Now add denied claims, add out-of-network charges, add prescription drugs that aren't covered or require prior authorization that gets denied, add the calendar reset if your illness spans 2 years. Add the ambulance ride that was out of network because you were unconscious and couldn't have chosen your emergency transport provider. Jennifer's $37,000 isn't unusual, it's typical. The Commonwealth Fund reports that 43% of working-age adults are inadequately insured, meaning they either lack insurance entirely or have insurance with deductibles and co-sharing so high that they can't actually afford to use it. 43%, nearly half of working Americans, have insurance that doesn't function as insurance. A 2022 Census Bureau survey found that 1 in 10 American adults, roughly 23 million people, owe medical debt. The total amount of medical debt in collections in the United States exceeds $88 billion. That's just the debt that's been sent to collections. It doesn't include the debt still being paid on credit cards, the debt people are negotiating with hospitals, the retirement accounts being raided, the house is being sold. And here's what nobody wants to say out loud. This is working as designed. The system isn't broken. It's functioning exactly as the insurance companies built it to function. Their profit comes from collecting premiums and denying claims. Every dollar they don't pay for your care is a dollar of profit. They have entire departments dedicated to finding reasons to deny coverage. They have algorithms that flag claims for review. They have phone trees designed to exhaust you into giving up. You're not their customer. You're their opponent. Now, you might be thinking, Bobby, this is terrifying, but what am I supposed to do? I can't control whether I get sick. I can't control what my employer offers for insurance. And you're right, there are limits to what any individual can do inside a system that's designed against them, but there are things you can do to shift the odds, and most people aren't doing them. The first is understanding that your emergency fund calculation is probably wrong. Most financial advice says save 3 to 6 months of expenses. That math assumes your expenses stay constant during an emergency. When the emergency is medical, your expenses explode. You need your normal emergency fund, plus your out-of-pocket maximum, plus a buffer for denied claims you'll have to fight or pay. If your out-of-pocket maximum is $8,000, you don't need 6 months of expenses. You need 6 months of expenses plus $15,000 at least. That's your real emergency floor. The second is actually reading your insurance policy. Specifically, the sections on claim, appeals, and out-of-network coverage. Nobody does this. It's hundreds of pages of jargon designed to be unreadable, but buried in there are the rules of the game. The timelines for appeals, the process for fighting denials, the exceptions and carve-outs that can save or cost you thousands. When you get a denial letter, that letter isn't the final word. It's an opening negotiation. Studies consistently show that patients who appeal denied claims win 30 to 50% of the time, half the time, but fewer than 1% of people appeal. The insurance company is betting on your ignorance and exhaustion. The third is keeping meticulous records. Every explanation of benefits, every bill, every phone call logged with date, time, and the name of the representative. When you're healthy, this seems paranoid. When you're sick, it's the difference between being steamrolled and having evidence for your appeal. The system is bureaucratic, so you beat it with better bureaucracy. The fourth is knowing your state's patient protection laws. Some states require insurance companies to cover emergency out-of-network care at in-network rates, Some states have independent review processes for denied claims. Some states cap balance billing. These protections vary wildly by state, and your insurance company is not going to volunteer this information. You have to know it before you need it. The fifth, and this is the hardest one, is accepting that the system requires you to fight. There is no version of this where you pay your premiums and get seamlessly covered when something goes wrong. That fantasy doesn't exist. Every claim is potentially a battle. Every denial is a negotiation. Every bill needs to be checked for errors. And according to Medical Billing Advocates of America, up to 80% of medical bills contain errors, usually in the provider's favor. You can be a patient, or you can be a victim. There's no third option. Here's what I keep coming back to when I think about the medical roulette trap. The American middle class has been building financial security on a foundation that can be erased by biology. You can do everything right for 30 years, save, invest, avoid debt, make responsible choices. And a single diagnosis can take all of it. Not because you failed, because the system is designed to extract maximum value from you at your most vulnerable moment. The American Journal of Medicine found that 62% of personal bankruptcies involve medical debt, and 78% of those filers had some form of health insurance. They weren't reckless. They weren't foolish. They got sick, and the insurance they'd paid for didn't protect them. Your net worth statement shows your assets minus your liabilities. It doesn't show your exposure, the potential losses waiting in the future that could materialize without warning. Your health is the largest exposure on your personal balance sheet, and it's completely invisible until the moment it becomes completely unavoidable. That $400,000 in your retirement accounts, that home equity you've built, that emergency fund you've carefully accumulated, none of it is safe. All of it is one diagnosis away from becoming a medical expense account. You didn't save that money for your future. You saved it for your insurance company's future. You just don't know it yet. I'm not saying this to scare you into paralysis. I'm saying it because the only defense is awareness. The medical roulette trap works because people don't see it until they're in it. They believe the premium they pay is buying protection. They believe the out-of-pocket maximum is their worst case. They believe that doing everything right creates safety. It doesn't. Not in this system. What actually creates safety is building financial margins so large that even the trap can't wipe you out completely. What creates safety is understanding the game before you're forced to play it. What creates safety is being prepared to fight for every claim, appeal every denial, and check every bill. Not because it's fair, but because it's necessary. Right now, you probably see yourself as someone who's covered, someone who's planned for emergencies, someone who's done the responsible thing by paying for insurance. But here's another way to see it. You're not covered. You're enrolled in a system that profits by denying your coverage at the moment you need it most. Your premium isn't buying protection. It's buying a lottery ticket. A chance that when something goes wrong, someone in an office building will decide that your claim deserves to be paid. Jennifer paid her premiums every month for 20 years. She thought she was buying peace of mind. She was buying a seat at a table where the house always wins. The question isn't whether you'll face a health crisis. Actuarially, most of us will. The question is whether you'll still have a financial life on the other side of it. The answer depends entirely on whether you see the trap before you're already in it. I've spent way too much time thinking about this stuff, so you don't have to. If this changed how you see your health insurance, hit that like button and subscribe. I'll see you in the next one.